What's happening with your home's value? That's what we're going to be talking about today. Hi, my name is Coley Bailey here with Fathom Realty. And as we move forward into spring 2023 here in Northwest Arkansas, the real estate market is showing signs of revival. Let me tell you, the Federal Reserve's interest rate hikes last year, of course, caused a ripple effect in the market, which was resulting in higher mortgage payments and causing potential home buyers to pause their buying decisions. And so consequently, in January, we experienced one of the lowest numbers of transactions in the last several years, really going back to 2015. But in contrast, we witnessed a sudden surge of buyers returning to the market in January and February. After coming to terms with the payment shock, with the high mortgage payments that are necessary to purchase a home now, many buyers actually took advantage of the slight dip in mortgage rates that we saw in February, and they began putting more offers on homes. And so we've even started seeing the resurgence of multiple offers on desirable properties. In fact, as I predicted, the number of homes closing in February increased from the January low, and this changed our months of supply equation from 6.45 months of inventory all the way down to 4.5 months of inventory here at the beginning of March. And so this swings the market from what was really a balanced market in January and February back towards being a seller's market coming into the spring selling season. So as more homes are listed over the coming months, I'm expecting our transaction numbers to increase as well. In this chart here, you can see the number of active and pending homes bouncing off that December low right here and starting to climb. Okay, of course this happens every year. Right there, right here, there was one in here, there, and then there's a January and February. So we're seeing a normal seasonal uptick in listings happening right here, and the number of closings seems to be following that trend and increasing as more inventory is hitting the market. Of course, you can see this the last couple of years, here, and here, and of course this was our January number, which again, this is always about a month behind the December low of the number of active and pending homes in the market. So January is the lowest number of transactions. And then, of course, as I predicted, February increased. This indicates that most homes are finding a buyer fairly quickly and keeping our days on market pretty low. Now, despite the surge in buyers that we're seeing, pricing is still trending sideways for now, which is akin to that flat trend that we saw in 2018, which was also a year of rising interest rates. Remember, we talked about this in the last video, I think, last month's monthly market update. But 2018 was kind of a flat year. We're sort of expecting 2023. Mid 2022 to 2023 to be fairly flat as well. Now, if interest rates rise from the level that they're at now, prices are likely going to experience some downward pressure, whereas falling rates will result in higher prices because we're going to see a flood of buyers rushing in to take advantage of that. Now, in February, the average sale price was $387,692, and that was right here. So which now that's still 8.15% higher than February of 2022, which was, I think, this one, I think here. So we're still above last year's market for now. Now the median price went up to $332,000. So again, we're sort of seeing this sideways trend taking shape. So although the prices have kind of stabilized in this range, the market does appear to be building a support level here. And because you can see the prices have bounced off here and here, it seems like we've got somewhat of a support level here. And so it's primed to break higher as we move into the spring and summer. That high buyer demand early in the year leads me to believe that we will be heading back into a moderate seller's market with prices rising throughout the next several months. Now, of course, demand for our homes in this region is really strong. So, with slightly higher inventory levels than the past few years, this buyer pool is also smaller than it was this time last year, as the interest rates have, it's significantly impacted the affordability. However, there are many buyers who just simply can't wait any longer, and they're jumping on the opportunity to buy a home now with less competition. Now, also, mortgage rates are holding to a higher range above the 10-year Treasury than their historical trend. So, mortgage rates are currently slightly more than 2.5% over the 10-year Treasury bond. The same investor pool that buys mortgage-backed securities usually also buys that 10-year Treasury. So, they're looking at where is the safest place for me to put my money. Is it worth the risk to do mortgage-backed securities, or should I just put it in the 10-year Treasury? And so that mortgage-backed security tends to need to be about 2% higher than the 10-year. Going back to 2019, as you can see, that the 10-year Treasury was about 3%, and mortgage rates got almost up to 5% at the end of 2018, going into 2019 there. And so that's pretty consistently about what we see, is about 2% over that 10-year Treasury. And if you look right now, the 10-year Treasury is about 4%, maybe a little bit above that, but mortgage interest rates are at above 6.5. Okay, they're about 6.6, 6.7. This is kind of the average across the industry. So the difference between here and here is higher than what I was saying. It's higher than this historical trend of 2%. So this indicates we could see a compression of that range right here back to a more normal range. And if that happened, it would lower mortgage rates back to, about this 6% level. And that would increase affordability for many buyers. So we are experiencing a balanced market, and as the rate shock subsides, more buyers are expected to join the market in the spring. Moreover, with mortgage applications on the rise and multiple offer situations already cropping up in January and February, our March closing numbers are expected to continue climbing higher. So overall, we're anticipating a strong spring market with fairly robust sales numbers and a slightly rising price. So here's what all this means to you. Is the Federal Reserve finally going to get a handle on inflation? I don't know. Are interest rates going to be allowed to fall? We'll see. Only time's going to tell. But here in Northwest Arkansas, this real estate market seems to be holding up really well. It's a very resilient market. And right now, I'm seeing a big window of opportunity, especially for you people who need to sell a home and then buy another home. You've got great equity in the home that you have. And so you can take that equity into your next home, and your payments might even go down even with higher interest rates. Okay, so there are multiple ways to skin this cat. Let me just put it that way. Another thing that we've been seeing, especially something that's being offered by a lot of builders, is they're offering to buy down that interest rate. So they're buying down the interest rate by maybe 2 points in the first year, 1 point in the second year. That's a 2-1 buy down, and then you're at the normal rate that you were quoted in that third year. The other thing is you can potentially permanently buy down by a point or so. That's also an option, and we've seen some builders doing that. I will say, as the market heats up and they get more and more buyers just coming in, they're going to stop offering incentives like that. So you got to jump on this pretty quickly, because that could be going away faster than you might realize. Now, to see the strategies that we've been implementing for my clients to sell their house for the most that the market will bear, I want you to watch my pre-listing Price Accelerator guide. Okay, there's going to be links to that around this video. And so definitely go there and watch that. It's about it's like a 20-minute video that shows you how to maximize the presentation of your home and the promotion of your home to get the highest price. So I definitely want you to check that out right now. It's more important than ever that you're picking the right agent with the right strategies to get you the best results. Once again, my name is Coley Bailey with the Lone Rock Home team here at Fathom Realty. And if there's anything in the world that I can do to help you, let me know. I'd be happy to get to work for you. Otherwise, I'll see you next month.